To build anything that truly lasts, it takes time.
Hello and welcome. You are watching Your Trades with me, Ankur Mishra and Ankita Saxena. In next half an hour, we'll decode the markets for you, not just for today, but for the entire week. And a good day of trade today, Ankita, where you can see the closing at least 56 points in the green territory for Nifty. But overall, if you talk about on a weekly basis, we are around 0.5% down.
Yes, Ankur, we managed to recover in the last during the last part of the trading session. In fact, on the Nifty, we recovered almost 127 odd points from the day's lowest point, and on the Nifty Bank also a sharper recovery was seen of more than 400 odd points from the day's lows. You can see the chart how the recovery came in. We did shut shop at 25,461 levels, so we managed to scale up this 25,450 levels at least. So recovery coming in the second half of the day. Nifty Bank also ditto, like I mentioned, we managed to shut shop above the 57,000 levels on Nifty Bank as well, and the market breadth also improved in the second half of the trading session today. Well, so that's how the market shaped up in today's trading session, but let's take stock of how the market shaped up throughout the week since it's Friday. Well, Nifty has snapped its 2-week gaining streak, and it was mainly dragged by Trent, was the biggest loser today. We all know the weak commentary coming in by the management and also a downgrade coming in for Trent. So that stock was down and out almost 11%. It did it managed to recover, but look at the steep fall in Trent that was going down. Nifty, so Trent and Axis Bank, the biggest losers for the week. If you look at the broader markets were underperforming today. Small cap and mid cap though advanced for the second consecutive week. On a weekly basis, we still managed to outperform on the broader markets. But Nifty Pharma remained the top sectoral gainer, that is advancing for the second consecutive week, with Natco Pharma and Laurus Lab taking the lead, and PSU banking names also doing well yet again in the second consecutive week. We also had Nifty IT that was doing well, but the top sectoral loser was Nifty Realty. That was languishing in the week, but in today's trading session, it recouped its losses and was a top sectoral gainer. So that's how largely the markets shaped up in this week. But let's get on board our guest. Rajesh Palvia, Head Technicals and Derivative Research at Axis Securities, is joining in. Ajay Bagga, a market expert who's also joining us today. Hi, good afternoon to both of you. Thank you so much for joining us. Rajesh, let me come to you first then. We did see some bit of a recovery coming in the second half of the trading session, especially on the Nifty Bank. We did see good recovery. So come Monday morning, there are a lot of cues to watch out for. Earnings will start next week. What are the levels to watch out for in the next trading session?
Good afternoon, everyone. So, if we analyze on a broader sense, both indices are trading above 220-day moving average, which is a sign of positivity on the near-term perspective. Even if we look at the India VIX, which is trading at lower band of this around, it's trading at lower band of last 5-6 year. It's quoting at around 12.40 kind of level. So which is also giving a sign of, that, sentiments are intact on the bullish side for the market. There is no fear on the street. If we analyze the broader market, most of the mid cap, small caps are still holding, despite there was some volatility in the indices, but mid cap, small cap stocks are still holding above their near-term, short-term breakout levels. And we have seen, participation from the sector like oil and gas, metal, even IT, these all, even pharma, all these sectors were, showing strength in this volatility also. So buying interest is clearly there in the street, and the traders as well as investors are, trying to buy stocks where, risk to reward in their favor, and the large accumulation activities already done for the sectors are, on the buying side of the trade. For indices, we believe that, till Nifty is holding about 25,300, trend is likely to exhibit on the bullish side. On the higher side, 25,600 to 500, this range may act as a supply zone, as major call writing activity has been there for especially in last 2-3 trading session for this strike. So once Nifty manages to cross about 25,600, then we may witness some short covering action, and then possible rally can extend further to 25,800 also. So our view is bullish. 25,300 is the stop loss to buy and accumulate in Nifty. For Bank Nifty, 56,500 is the key support area based on the put based concentration. I think till these levels are intact here also, Bank Nifty will also try to exhibit on the bullish side only. 57,200 is the immediate supply zone based on the call concentration. Once Bank Nifty manages to cross these level, I think here also we may see short covering action, and which could take Bank Nifty higher further to 57,600 to 800 zone.
Right, that's the advice on Nifty and Bank Nifty from Rajesh Palvia. Let's also welcome Mr. Ajay Bagga to this conversation. Mr. Bagga, we are expecting the announcement as far as US trade deal is concerned anytime. That is the indication which has come in from all the channels. But what should one watch out for in terms of level? Do you think there will be an impact on Indian markets per se, or you think we have already absorbed all the negative impact?
I think most of the negative impact has been absorbed. If you look at May, the US average tariff in the US was 8.8%. In June, it has gone up to 15%. With the full China-Geneva deal coming in, the average of all goods imported into the US has gone to 15%. India will probably get a 10% universal tariff with sectoral tariffs on auto components as well as steel and aluminium from 25 to 50%. That's our expectation. That's what baked into. Now, if there is a unilateral letter from Trump saying that negotiations have broken down with India on agriculture and dairy products, and we are levying the 24% reciprocal tariffs that had got calculated on 2nd April, then that will be a disappointment for markets. But if it is 10% universal plus sectoral tariffs, I think that is more or less factored in by the markets.
Right. So Ajay, you're saying that most of it is priced in by the market. So what are going to be the triggers for market next? Of course, we are starting with the earnings season. And what do you see for the earnings, come first quarter of FY26? What are you seeing on the earnings front, and what are going to be the next triggers for market? Because we are in a corrective phase right now. So there have to be some triggers for the market to pick up direction, right?
See, three big things we have to keep in mind. Now, one, this market has been in corrective phase since last week of September. So we have finished 9 months. We are very near the median correction time period, which is basically 9 to 12 months is what Indian markets really spend in correction territory. So we have spent the time-wise. Second big trend is that promoters holdings have been reducing along with the FI holdings, and domestic holdings have been increasing. Now, domestics are by definition more retail money and more long-term money. So the strength of the market has been increasing. Valuations are still quite high, which is the issue in the markets not rushing towards reclaiming the September all-time high. The third big thing we have to keep in mind is last April to September, because of the follow-on to the national elections. So the results came in June, and we saw nearly till about September, activity was still very slow. So from March to September, we lost out a lot of time last year. Earnings were very sluggish. You're going to get the benefit of the base effect this time around. So we are expecting 12 to 14% earnings growth for NSE 500. That will help the markets. That will make the valuations look a little bit less expensive, and there will be pockets which will look attractive. So base effect is coming in. So three big things. Domestics are owning more of the market. They've reached about 25%. It's going to go to 30% in the next couple of years, which will give strength to the markets. Second, time-wise, we have played out. And third, valuation-wise, you're going to see better earnings on a base effect basis.
We understand that's the advice which is coming in from Ajay Bagga, but let's also bring in Rajesh Palvia. I want to understand from you, you have given the levels of Nifty and Bank Nifty, but I ask you about the sector specific. Which are the pockets one should pencil in at least for next 10 days where we understand the news flow will be too heavy?
So I think some of the sectors where we are witnessing fresh breakout and fresh buying activity, the sector like oil and gas sector, telecom, pharma, and capital goods. These sectors are attracting more buying action, especially in this week. Also, we have witnessed a lot of stocks from these sectors have shown a good buying action. So I think from oil and gas, there is a fresh breakout in the stock like from the OMC pack, like BPCL, HPCL managed to give a fresh breakout from the mid cap space. Chennai Petro managed to give breakout. Even the Reliance is also looking bullish. So all these stocks are showing fresh buying action. Again, the gas related stocks like MGL, IGL are also on a upward trend. So all these stocks are looking bullish, and we believe that kind of breakout happens can take these stocks further higher. Another sector where we are focusing, that is pharma. Uh, some of the stocks from the pharma sectors are still trading at all-time high trajectory, and the way the buying interest is there in the stocks like Laurus Lab, Glenmark Pharma, even Divi's Lab. All these stocks are attracting buying, even despite these all stocks are at all-time high trajectory. And some of the stocks which were under a corrective mood are also started recovering from the lower band of their consolidation. So I think pharma is another space where one can focus in the coming week for buying side. And from capital goods space, I think Siemens and ABB, these two stocks are looking promising. So here also one can look to buy, and we may see good up move in these stocks also.
All right, so a couple of pockets that you mentioned, oil and gas sector, yes, that has been a buzz. Pharma pack that is showing renewed interest. Ajay, let me come to you for this. So there's a sectoral churn that's happening. So in this, which sectors are likely to lead from the front? Because there was a point there where, of course, financials was a common consensus. But now in this sectoral churn that's happening, what are the pockets of value in your opinion?
Well, there are stocks across sectors, but if you look at sectoral, I think financials are still well positioned. You will see some amount of a drag because of the rate cuts on the bank NIMs, but the volume expansion will more than make up for it. And going ahead, volumes will look better at lower rates. So banks will benefit, and the entire financial stack from NBFCs to AMCs to the capital market related companies, insurance companies, those are looking very good. Second, cement is coming back. We have seen a lot of run up already. Third, consumption with a good monsoon, rural demand is picking up, and urban should follow by the festival season around October. We should see urban demand also coming in. So consumption is looking good. And then industrials continue with the amount of spend that the government is doing on the infrastructure side, on defense, on railways. I think all that will continue to do well. Defense, of course, the valuations becomes an issue at a particular price point, and then we see fresh orders coming in, and another boost up comes to defense. So right now it's on a pause mode because of the valuations, but it should benefit from the new order flows. IT is turning around. IT has had a good month, and we expect the worst of IT to have been over, but more the mid cap, small cap IT will do better than the large cap IT.
All right, Rajesh, I want to come to you now to understand that which are the stocks one should focus on specifically, and are there any recommendation from your side?
So I think the sector which I mentioned, the two stocks ideas I have picked up from the sector. First one is from the pharma itself and the Glenmark. The way Glenmark is now managed to give breakout of rounding bottom sort of formation on a weekly chart. So this is fresh breakout of rounding bottom formation on Glenmark. So we believe that here there would be more continuity of uptrend, possible upside towards 1890, 1900 we may see for Glenmark. Buy and accumulate would be strategy. 1805 should be the stop loss. Another stock that we like is Reliance Industry. Now stock is negotiating with its a September 2024 swing high, And the way the stock, showing strength on the weekly chart, we believe that Reliance may continue furthermore upside, and we may see good support in the indices also from the Reliance industry itself. Possible target towards 1570 we are expecting in the near term perspective. So buy and accumulate would be the strategy with stop loss of 1500.
All right, so those were two picks by Rajesh. But Rajesh, let me come to you for one last question, and on a stock specific question. And the stock for the day, perhaps the week, was Trent, that was down and out 11%. But Trent has been in a corrective phase, whether it is on the back of weak updates coming in, or a weak outlook, or a downgrade coming in from brokerages, because Trent had also run up quite a bit. From here on, what do you see on the charts for Trent?
So we have observed that Trent, the major support area on the downside is placed at around 5,4800 for the Trent, and we have seen the same kind of corrective move earlier also for the stock. Now looking at the intensity of supply pressure in today's session, I think we may see further more down move towards 5200, 5100 kind of level. But again, 5,000 may act as a good support area. So I think those who are looking to buy the stock in this corrective move should wait another 100 200 point correction, and then I think one can buy and accumulate, as long term structure is bullish. But yes, we may see some consolidation or range bound kind of activity in range of 5,000 to 6,000 for some more couple of months, until the some revival sign we don't get from the management. So I think 5,000 to 6,000 would be the broader range for the stock. So buy in the correction would be the strategy for this stock. Your stop loss should be placed at around 4850 if you are buying in the decline.
All right, that's the advice coming in for Trent. But thank you so much, Mr. Palvia and Mr. Bagga, for joining at this hour. And with this, we are completely out of time in this edition of Your Trade. Thank you so much for tuning in. On behalf of Ankita, me, and entire ET Now team, thanks for watching.